earnings, we have Mindspace REIT in India reporting first quarter results with revenue from operations jumping 26% higher from a year ago. Their net operating income also grew almost 28%, while distribution per unit also reaching a record high, up 15% year on year. The REIT's committed occupancy rose to nearly 96%, and they also announced the launch of 2 new office buildings and 2 hotels, expanding their total portfolio to more than 46 million square feet. For more on the results for Mindspace and also the REIT's own long-term ambitions, we are joined by Ramesh Nair, who's the Managing Director and CEO of Mindspace. Ramesh, it's good to have you with us. I do want to get into the net operating income because, again, it seems to have impressed quite significantly, up by about 26%, about 27.8%, that is, on a year-on-year basis. I want to know how much of this is coming from some of the new projects and strategic acquisitions that Mindspace embarked on. How much of it was driving this? And again, and how much of this was coming from some of the continued operations of Mindspace?
Good to be back on your show, JP. Like you mentioned, our NOI is up 28%. A lot of acquisitions done last year. But if you look at the like-to-like basis, it's still around 16%. It's been a record operating performance for us. In the last 6 months, we made our portfolio stronger, larger, and more diversified. The recent Chennai acquisitions will obviously address scale. This will give us more leasing opportunities. So this acquired vacancy from the Chennai assets and the development deliveries, which will come up over the next 12 months, will help us give better distributions over the next few quarters.
Okay. Ramesh, I think sometime last year when we last spoke, we talked about Mindspace and the growing importance of GCCs and global capability centers with regards to REITs, with regards to sustaining demand in the business park and office space. What's the growth been like since we last spoke about 12 months ago? And what has been driving some of this demand that some say could also be affected either for better or worse by some of the AI trends and progress we've seen?
JP, today GCCs are close to 53% of our portfolio. India has close to 3,700 GCC units and 2,100 GCCs. We've been seeing every year at least 100 new GCCs come into India. Today, the GCC market is already at $100 billion. We see this industry doing extremely well. More than 40-45% of the overall demand in the market today is GCCs, and we believe this will continue.
Okay, and apart from GCCs, we're also the other important trend with regards to AI infrastructure is that of data centers. This is a portfolio that Mindspace has also been expanding their exposure to gradually since, I believe, 2021. How big is this going to be in terms of how much it occupies as a percentage of Mindspace's portfolio, and how big of a revenue and income driver is this going to be in the next couple of years?
So we are the only REIT in India which has data centers in its portfolio. We have 5 data centers totaling close to 1.7 million square feet. We also have land in Navi Mumbai, where we are looking at opportunities for more data centers. We truly believe that AI, we haven't seen any impact so far, at least. There is definitely no evidence of any mass widespread layoffs anywhere in the market. I also truly believe that AI will create new roles. Lots of companies today are getting upskilled in AI. AI obviously will increase productivity, and this productivity will drive growth. And this growth will need more talent, and we'll be there to provide that space for this talent.
All right, and of course, this bullish expectation of expansion also perhaps supporting some of the expansion plans of Mindspace REIT. If I'm not mistaken, you've got a pretty healthy construction pipeline of over 6 million square feet, 2 new office buildings, and mind you, also new hotels. I do wonder about the funding climate because this is important when we talk to REITs and developers as well. What is the funding climate right now? Is it being helpful to sustain some of these expansion plans for Mindspace? And how is Mindspace planning to finance this, either through internal funds or through going into the debt markets? Can you talk to us about the funding strategy for these expansion plans that Mindspace has in their pipeline?
So today we have close to 6.6 million square feet under construction. Out of the 6.6 million square feet, 4.7 million is due this financial year. And most of this 4.7 million square feet is already pre-leased. On the capex side, definitely on the debt side, the interest rates have moved up a little bit. Refinancing has become a little more expensive. In Jan, we could raise debentures at around 7.1%. That's today become 7.7%, so around 60 basis points up in 6 months. But our team has done a fantastic job. Today, our cost of debt still remains the best in the market at 7.4%. All the ratios, whether it's net debt to NOI, which is today at around 5.7, or interest coverage, which is at 2.9 x, or LTV, which is close to 29%, we have done well on all those ratios.
Okay. Ramesh, I want to get your thoughts also on some new developments. We have heard from SEBI that they are going to allow Indian REITs to possibly issue overseas depository receipts. What are your thoughts on these developments? And could we perhaps see REITs like Mindspace exploring depository receipts in places like Singapore or in other markets as well? Do you see this as a positive for Mindspace and your future plans, especially on the financing side?
Definitely a positive move from the government side. Lots of initiatives over the last couple of years from the government, straight from equity classification of REITs, allowing REITs to directly take money from banks. This recent announcement, we're waiting for the fine print, but definitely a good move in the right direction.
Is this something that Mindspace could actually entertain if indeed the conditions and the fine print does support it, to perhaps look at offering depository REITs to investors, say at Singapore, who might be looking at this and going like, hey, I'd like to get in some of that action actually?
So that's definitely something a lot of international investors have missed out on the Indian REIT story. Over the last 3 years, I'm not just talking about the last 1 year number, we have given, our REIT has given absolute returns of close to 76%. And on a CAGR annual basis, that's around 22%. And a REIT like ours, which got listed in the heights of peak of COVID in August 2020, overall, we've given returns since then, total returns of close to 16%. So great opportunity for investors, international investors, and Singapore investors to look at Indian REITs.
And I think the reason there's also growing interest is because of the ambitious DPU that Mindspace said. If I'm not mistaken, it's about 6.67 rupees. Some say this is the highest ever. But of course, given these very lofty and very lucrative DPUs, the question of sustaining these DPUs has to be raised. Can you talk to investors who might be raising questions about the sustainability of these DPU levels, which, while are at very, very attractive and very lucrative levels, poses questions about how easy or difficult it's going to be for Mindspace to sustain these?
So JP, we around 2 years back, we hit double digits in terms of DPU growth. And since then, for the last 7, 8 quarters, we've been consistently giving double-digit DPU growth. This quarter was again 15% growth. The main reason why we believe this can be sustained is our under construction portfolio. Like I mentioned, the 6.6 million square feet, again, 4.7 million of that is going to be delivered now. Our focus remains again how we can initiate new developments again in Hyderabad. and in Bombay. That's something we are closely looking at within the existing parks. We want to increase the data center portfolio. We want to lift occupancy in the parks where there's some space which is available. And also looking at more mixed-use kind of developments. You saw the two hotel announcements which we made. So this focus will help us drive DPU growth in the future.
Yeah, and Ramesh, I'm glad you brought up Hyderabad because if I remember the last time we spoke about 12 months ago, you were quite bullish and upbeat on the potential of the Hyderabad market, even recommending our viewers to go and check it out for themselves. I am curious as to whether or not Mindspace will be expanding into other urban centers outside of these four markets, or if it's going to, and if so, are there any other cities that Mindspace might be looking at if they're looking to perhaps broaden the portfolio or the kingdom, if I can call it that?
So one interesting aspect was in Chennai, we were not amongst the top owners of space in that city. And with the two new big acquisitions we did, we've become the second largest player in Chennai. The other three cities, we are number one in Hyderabad, number one in Mumbai, and number one in Pune. So we dominate the markets which we are present in. We always look at other cities. We look at all opportunities. And I'm sure in the future we will move into newer cities.
All right, but for the time being, perhaps we're just concentrating on the opportunities in these four fast-growing centers might be the game plan for Mindspace as they continue to build out that ambitious and lucrative pipeline. Ramesh Nair from Mindspace REIT, we always appreciate the time. We look forward to the next time you can join us here on Inside India to talk more about the outlook for the property sector and commercial space out in the subcontinent. Now, we are counting down to